Last week proved to be a bad week for mortgage rates as tensions in the Middle East flared up. We had Iran and the U.S. going back and forth, lobbying attacks. We actually had Saudi Arabia and we had other countries start attacking Iran in response to their attacks across the Persian Gulf. And to boot, the Houthis out of Yemen started attacking Saudi Arabian shipping going through the Bab al-Mandeb Strait last week. All of that caused oil prices to go up to over $100 a barrel. Interest rates shot up to about 6.7, 6.8%. And that's where we ended the week, with a strong expectation that rates would continue to rise as the week begins. However, over the weekend, Iran and U.S. stopped attacking each other, and that actually has given us a little bit of hope as we go into this new week. Let's again, we take a look at the rates. We can see they were up. 30-year fixed, 15-year fixed rates were both up. Refinance rates were up. Mortgage applications really slowing down. We saw new home sales slow last week. We also saw pending home sales report slow, which shows the impact of higher rates over the last 4 months, what they're having on our market. Let's do a deep dive into what's driving mortgage rates up, and it's oil and the geopolitics. Last week, kind of a little bit of analysis here. Last Thursday, oil topped $100 a barrel as the Houthis forces started striking shipping in the Red Sea. And then on Thursday as well, President Trump told Axios that he was close to launching a massive attack on Iran, and which is going to be bigger than the February attacks. And then on Friday, actually, oil prices started to come back down a little bit, but still overall up 11% for the week, but slightly off their highs. And then Sunday again, as I stated before, U.S. and Iran kind of held off on strikes for the second day, which is good news. We saw actually a 5% drop in Brent crude prices from down to 92%. So, the week's range were between 92 and 102, but still elevated. Again, a couple weeks ago, we were below $60 a barrel. So the tension to watch, if we see renewed strikes, oil prices will go up, inflation will go up, yields will go up. If we see a continued lull, there is room for interest rates to come down, maybe an eighth of a point, maybe a quarter point. We'll see. But that's what's driving us right now. It's not the economic news as much as it is oil and geopolitics. This week is a big week for economic news stateside. The biggest event this week is a Fed meeting on Tuesday and Wednesday. And for the first time in a while, we have a hike to the Fed funds rate really is on the table. There's a 30 to 35% chance that the Fed will raise the Fed funds rate. Now, Larry Gonzales thinks that's not going to happen. I think they're going to leave rates where they're at between 3.5, 3.75. And the reason for that is inflation reports are still showing inflation pretty calm, and job market has been very strong, so there's really no reason for them to raise the Fed funds rate. Certainly no reason for them to cut, but no reason for them, and the impact, I think, to especially small businesses would be immediately felt if they were to raise the Fed funds rate. So I don't think that's going to happen. But on Tuesday, they're meeting, 2 p.m. Eastern time on Wednesday. They will make their decision, and then they come out with their typical policy statement. Then at 2:30, Fed Chair Warsh will get up and do his usual press conference. And the key with this is, what's his tone? Is he hawkish? Is he saying there's a good chance we're going to raise the Fed funds rate over the course of the rest of the year? Or, is there a cut on the table? We'll see. And a lot of that will be dependent on kind of this discussion that they have behind closed doors as they meet. Fed Chair Warsh, this is his second meeting. He has said that he does not want the Fed driving the market. He wants the Fed to react to the market. So we'll see if he puts himself front and center as the person who speaks and makes the market move. I'm hoping he doesn't, but you know what? It's his second meeting. We just don't know which way he's going to go there. All right, for the rest of the week, we have on Monday's a little lighter day. We have a durable goods order report. Tuesday, we get the Case-Shiller Home Price Index. Case-Shiller Home Price Index is the gold standard for home price appreciation across the country. Consumer confidence, always a big report. Where's the consumer at? Do they feel confident about the economy? I don't think they do. We also, on Wednesday, again, the Fed decision, Chair Warsh comments after. And then on Thursday's a big day too. We have the advanced report on the second quarter GDP coming out. And then we have the core PCE, personal consumption expenditure report, which is the Fed's favored measure of inflation. We'll see where the inflation goes. And I think that actually might be pretty good considering this report reports May's inflation, not June's inflation, May's inflation. So it's a little time late. We'll also get a personal income spending report and the usual jobless claims continuing and initial jobless claims. We had big drops last week. We'll see if there's a rebound this week. And then Friday, we got employment cost index. We have the University of Michigan Consumer Sentiment Index and the Chicago PMI report. So a big economic week ahead. Again, rates are sitting in the high six, really not even the mid. We're talking high sixes for conventional, mid sixes for VA. Refi rates, they're not even on the table right now. Fed is running the show this week. But you know what? Oil and geopolitics will carry the day. We need some quietness in the Middle East. We need a soft inflation report, and that could help us out. Again, don't have a very clear crystal ball on that. You know what? I'm in the audience watching just like you. Have a great week. And if you are still looking to buy and you're not really sure, should I buy? Should I wait? Let's have that conversation. Depends on where you're at, depends on what you're trying to buy, because in some parts of the U.S., in some parts, let's get micro, in some parts of Hawaii, Oahu, it is a buyer's market. I have clients who are getting rates into the mid to low fives right now, a full point lower than what the average VA rate across the country is. And that's because we're being smart, we're using seller credits, and we are helping our clients save money, making homes affordable for them now and in the future. It's really affordable too when you have no money out of pocket, which many of my clients have. So anyway, give me a call. Let's talk numbers. Let's see if buying is right for you. And guess what? If it ain't, I'm gonna tell you, because you know what? It doesn't do me any good to have somebody buy a home and then be house poor. Nope, that's not the way I work. That's not the way we work at the pro.